Hi friends, hope you all are doing good. Welcome to a new lesson. Today's topic is SARFAESI Act. SARFAESI Act. SARFAESI Act has created for some good objective. So the objective of SARFAESI Act is to do the speedy recovery of non-performing assets of banks and financial institutions. So banks and financial institutions non-performing assets will be recovered and realized through SARFAESI Act. That is the objective of SARFAESI Act. Let's begin with SARFAESI Act. So there are three keywords needs to be understood very clearly from SARFAESI Act. First one is securitization, and the next one is reconstruction of financial assets, and the third one is enforcement of securities interest. Securitization. Securitization means a process whereby banks and financial institutions transfers their non-performing assets to the asset reconstruction companies. So, asset reconstruction company will action those assets at a later point of time and then realize money. So, in the meantime, asset reconstruction companies will give an advance to the banks. Asset reconstruction companies will give money to the banking financial institutions upfront and they will do the realization at a later point of time. So, okay, that's securitization process. As a result of securitization and reconstruction process, you can see the bank's balance sheet becomes better. If you see the bank's balance sheet, the non-performing assets lies in the asset side of bank's balance sheet, as causing the capital adequacy ratio becomes very less. Now, when you move these non-performing assets from bank's balance sheet to the asset reconstruction company's balance sheet, the capital adequacy ratio of bank's balance sheet becomes better. So now the objective of the bank is to remove these non-performing assets from the bank's balance sheet. So now let's go to the next area. Asset reconstruction company. Asset reconstruction company is a company created for this purpose to serve the banks and financial institutions to realize the assets, to realize the non-performing assets. So as part of that, assets and reconstruction company raises money from qualified buyers. So they raise the money from the qualified buyers and give that amount as a purchase consideration to banks and financial institutions upfront. For example, if the loan amount is 100 crore, which is a non-performing asset in the bank's balance sheet, these asset reconstruction companies won't give 100 crores upfront. They can go for any combinations. At present, they will give 50 crores or they will give 20% as advance or they will give a lot of combinations to the bank at present, and they will take the assets, they will take those non-performing assets, and they will, so the asset reconstruction company are the owners of these non-performing assets. Okay, what are these non-performing assets? First, these non-performing assets are secured assets. Banks have given loan to the borrowers as a secured debt. That means these assets are secured by some properties, some securities. Okay, so the non-performing assets, okay, once moved from the bank's balance sheet to the asset reconstruction company, asset reconstruction company becomes the owner of all the securities. Okay, what are all the securities pledged and taken loan for that, towards that, those securities will lies under asset reconstruction company. They becomes the owner. So now asset reconstruction company discharges the purchase consideration to the banks and financial institution. They raise this money from from the qualified buyers, and for raising this money, asset reconstruction company provides security receipt to qualified buyers. This is as per section 7. They will give this security receipts, and then qualified institutional buyers will get some return in addition to whatever they have invested, and only for that purpose they are doing this investment in the asset reconstruction company. They will get a good amount of return for the amount they have invested. Okay, now let's start with section 3. Section 3 relates to registration of asset reconstruction companies. Okay, registration of asset reconstruction companies. two conditions have to be satisfied. Condition number one, the asset reconstruction company should obtain a certificate of registration, and the asset reconstruction company should have a net owned funds not less than 2 crores. And the third one is there is a time limit, like if the asset reconstruction company incorporated, and the next step is within next 6 months they have to do the registration process, and that is before expiry of 6 months from the commencement of the business they have to do the registration with RBI. Okay, and what happens is they will just initiate the request to RBI and RBI will process the request. In the meantime, they can still continue their business until they get a reply from RBI that your registration is cancelled. They can do their business. There is nothing wrong. Okay, let's go to the next. Okay, what are the conditions for granting registration? What are the conditions? RBI will look into it and provide registration. First one is the asset reconstruction company has not incurred any losses during any of the 3 previous financial years. That means in any of the 3 previous financial year, if they incurred losses, in that case they are not eligible to become asset reconstruction company. They won't get registered. And the next one is adequate arrangements for realization of financial assets acquired by it. The next point is adequate arrangements for realization of financial asset acquired by it. The asset reconstruction company should be capable of doing proper arrangements to do the realization of financial assets acquired by it. So they should have proper steps, they should have proper procedure, they should have proper plans to realize these non-performing assets into realization asset. They have to do proper action at the right point of time and do the things, and they should have all the plans for that. And with relating to that, they have to do proper periodical return and they have to redeem on respective due dates. Okay, what is redeem is nothing but they will give the security receipts to the qualified buyers, and those security receipts will have value with certain timeline. They have to do the redemption on time. They have to give proper return to the qualified buyers on time. Whether they have policies, they have procedures with related to that, RBI will look into that and they will give registration. And the third point RBI will look is directors. With relating to directors, RBI will look into the directors' position and their professional experience, whether they have professionally qualified, whether they have adequate professional experience gained, and whether number of directors has been, is there any conviction against the directors. So RBI will look at whether number of directors has been convicted of any offense involving moral turpitude. Okay, and the fourth thing RBI will look is that sponsor, whether the person who is doing the sponsor, the qualified buyer, is a proper fit. Is the person is a proper person as per RBI. They will look into this. As per RBI, they will see whether these people are eligible to do the sponsorship to the asset reconstruction company. They will see, and then they will give the registration. And the fifth point RBI will look into that is asset reconstruction company has complied with all the procedures and policies suggested by RBI. Did asset reconstruction company comply with it or not is the question. And the next one is, in future, if RBI impose some restrictions, impose some rules, if they suggest some rules and procedure, is the asset reconstruction company ready to follow that or not, will be checked in this clause. And then if all these conditions are satisfied, if all the 5 points are satisfied, then RBI will give the registration to asset reconstruction companies. So okay, prior approval of RBI for any changes, any substantial changes, any movements in terms of directors or anything, any changes in the place of business have to be informed very clearly. Okay, now let's go to section 4. Section 4, cancellation of certificate of registration, and at what situation RBI will do the cancellation. Let's start. First thing, if the asset reconstruction company ceases to run the business of asset reconstruction, or ceases, that means ceases in the sense they stop receiving or hold any investments of qualified institutional buyers, in that case RBI will do the cancellation. And the second point is, if the asset reconstruction company failed to comply with any of the conditions or guidelines suggested by RBI, if asset reconstruction company fails to comply with any of the conditions procedures suggested by RBI will cancel the registration. And the third point is, if the asset reconstruction company fails to comply with any directions and fails to maintain accounts, fails to submit, or fails to provide any details, and then fails to obtain prior approval of RBI for any subsequent change in management, in this situation RBI will do the cancellation. So there are 2 seizures point, and then overall 5 failures point relevant with related to cancellation. Section 4 is very important from examination perspective. To be precise, there are 2 points relating to seizures, and then there are 5 points related to failure. I'll repeat it again: 2 points related to seizures, and then the 5 points related to failure. Okay, and so if these points are satisfied, RBI will do the cancellation. Okay. Section 5: acquisition of rights or interest in financial asset. Okay, first point is acquisition of financial asset by an asset reconstruction company. On what basis they do the acquisition? Okay, normally asset reconstruction company will give a kind of debentures issue, or else they will enter into some kind of agreement with banks. These are the composition they will give. First, they will give some amount of 20% or 10% of the amount, and the remaining amounts they will give it as a debenture, or they will give some other combinations. And then exemption from paying stamp duty. This point is very important. So normally the securities will be transferred to asset reconstruction companies. During this transfer, there shouldn't be any stamp duty charges. That is the point. Okay. Substitution of name asset reconstruction company in the legal proceedings. This is nothing but the asset reconstruction company's name will be reflected in all the securities. The names will get changed in the registrar office. The name of bank will be removed and the asset reconstruction company will be fixed there. Section 5A: transfer of pending cases to any one of debt recovery tribunal, which is nothing but if 2 cases staying across 2 debt recovery tribunal, in that case those cases will be moved to any one of the debt recovery tribunal, so that the debt recovery tribunal will have a very clear view about the total number of cases arrived with relating to this single issue, and they can take a call. That is section 5A. And then section 6: notice to borrower and discharge of obligations of such borrower. Now, at what point of time banks and financial institutions will discharge their rights? Now, banks and financial institutions have to give proper notice to the borrower. That means they failed to make the payment, they failed to do their dues, they failed on their dues. That case, they have to give proper notice first. They have to give a notice for acquisition of asset to the borrower, and then they have to give proper notice to the concerned regulatory authority who is handling. They have to give proper notice to all the connected person with relating to this property, and then they have to take a right. Okay, when no notice is given, institutions, before giving any notice, if they realize some amount, whereas asset reconstruction company has taken the credit, taken the non-performing assets into their books, that case whatever amount the banks realized in this case will be in the bank's account as a trust, as a trustee, money held in trust. I'll repeat again: where if there are no notice given, and if money received by the bank instead of asset reconstruction company, in this case the money held in the bank account will be considered like the money held in the accounts of trust. Bank have to do their job as a trustee role here, and banks and financial institution have to keep this money and give the money to the asset and reconstruction companies. So that is section 6, very important. And the next one: measures for asset reconstruction company. What are the measures asset reconstruction company will take? Section 9: following measures asset reconstruction will take. First one, they will take the management. They will do some changes. or they will take over the management. And then the second point is they will sell the management or they will lease the management. They will lease the company or sell the company. And the third one is they will do some kind of rescheduling payments. Fourth one is they will just enforce securities interest as per this act, whatever is possible they will do. And the fifth point is settlement of dues paid by borrower will be adjusted. What are the dues needs to be paid by borrower will be settled. In that case, this act's purposes comes to an end, and taking possession of secured asset. Okay, they will take possession of the secured asset. And there is another point which is relating to some kind of combinations they can go for it, like they will go for converting the debentures into shares. They will buy the ownership of the company and they will come out. Okay, these are the measures that the asset reconstruction company will take towards the debt. Other functions of asset reconstruction company: they act as an agent for banks and financial institutions for recovering the dues. They act as manager. For that they charge some fees, and then they act as a receiver. In this case, court will appoint them. Okay. So the asset reconstruction company should not do any business other than securitization and reconstruction business. Okay. Now, section 11, disputes. Any disputes among bank, asset reconstruction company and qualified buyers will be resolved as per Arbitration and Conciliation Act 1996. Now, section 12, powers of Reserve Bank to decide policies and then issue directions. First thing, whatever policies and procedures given by RBI should have a binding effect to all the concerned person. So now section 12.1 relate to what are the powers RBI has with relating to these scenarios. First thing is RBI will create policies as well as procedures, and they give proper directions, and they will create policies with relating to this 5 categories. With relating income recognition, they will create policies and procedures and give proper direction. And then with relating to accounting standards, they will give proper policies, directions. And then with relating to provisions creation in terms of bad debts, they will give proper policies, procedures. And then with relating to capital adequacy ratio and capital adequacy, capital requirement with relating to its risk asset, they will give some policies and procedures. And then with relating to deployment of funds also, they will give some procedures and policies. And these are all for the purpose of the asset reconstruction company, or it can be to all the asset reconstruction company or any specific asset reconstruction company. That is the point. If any asset reconstruction company cannot say to RBI that it has applied, RBI has taken a biased view only to my asset reconstruction company. They have taken this kind of situations. No, not the case. It's up to RBI to decide whether it is applicable to everyone or a single asset reconstruction company. Okay, for what purpose they are doing it? Only for the purpose of regulating the financial system in the public interest and also the interest of investors and asset reconstruction company. Powers of RBI to call for statement and information, and the RBI will also carry out audit and inspection. And while doing conduct of audit, all the persons with relating to asset reconstruction companies, like the employees, directors, everybody should cooperate and provide proper information, and they have to give proper assistance, cooperation. Banks and proper books and accounts and other documents need to be submitted, and they have to provide proper statements with relating to the affairs of the company. Now, powers of RBI to remove the directors and appoint directors. Okay, RBI will have the extreme power with relating to appointment and removal of directors of the asset reconstruction companies during audit or otherwise. Otherwise in the situation where situation comes, RBI will do the audit. During audit or otherwise, RBI will remove or they will appoint. They can make some changes with relating to removal. They can remove chairman, director, or additional directors, and they can also appoint additional directors if necessary. And then they can also appoint an observer to observe the work of books of board's operations of such asset reconstruction company. Enforcement of securities interest. Section 13. Section 13 is very important from examination perspective. First point, no intervention of court or tribunal in enforcement of security interest. Court cannot interfere into any of the steps taken by secured creditors or any other asset reconstruction company. They don't have power at all. Notice by secured creditor to borrower to discharge liabilities within 60 days. Within 60 days of default, and there should be a notice to be sent from secured creditor to the borrower, and then the secured creditor should take some action. Before sending notice, secured creditor is not entitled to take any action as per the act. Now, secured creditor is empowered to issue a written notice if the borrower makes any default in a secured debt or any installment thereof. And the second point is the account of such borrower is classified by secured creditor as non-performing asset. In that case, they can give notice, and then borrower is required to repay, pay in full within 60 days from the date of notice. Borrower is entitled to make representation or raise objection. The secured creditor comes to a conclusion that such representation or objection is not acceptable. Now, borrower will give his objection or not make his representation within a period of time. If secured creditor comes to a conclusion that such representation or objection is not acceptable, then secured creditor within 15 days they have to communicate this to the borrower that it is, I'm not convinced with your reply, so I'm going to take based on the rule, based on the act I can proceed further. That's what you will communicate. Okay, what are all the measures available for secured creditor? Okay, the measures available for secured creditor. First, secured creditor take possession of secured asset. They take over the management. They can appoint any person to manage the secured asset. So it's now up to the asset reconstruction company or the secured creditor. Secured creditor is nothing but the bank. They can take the possession. They can take these steps. Okay, they can give proper notice to any person who acquired any of the secured asset from the borrower, from whom any money is due or may become due to the borrower. Okay, they will give proper notice to any other person who is also related, with relating to this secured asset from the borrower. So the secured creditor should give notice to these people as well. Now, section 13(5)(a), rights of secured creditor to bid. That is, in terms of immovable property, the secured creditor will now bid those immovable properties. So, okay, now they will get some amount. That is nothing but as a result of selling the immovable properties or the securities, they will get some amount. That amount will be adjusted towards the purchase price, and the remaining amount will be handed over to the borrower. Now, applicability of Banking Regulation Act. Yes, all the Banking Regulation Act will also be applicable in terms of the immovable property. Now, 13(7), section 13(7), 13 subsection 7, recovery of cost by secured creditor from borrower. Now, at times what happens, the secured creditor may spend some additional amount in terms of realization of the the debt. So in terms of the security, so what happens is the additional amount they spent will also be part of the loan. The loan gets increased as and when the additional amount spent by the secured creditor. That amount will also needs to be paid by the borrower. Recovery of cost by secured creditor from borrower. At times secured creditor spends some additional amount in terms of the process. So that additional amount will also become a loan to the borrower. In that case, borrower have to repay the additional amount. So the additional cost in terms of recoveries will needs to be borne by the borrower. That is the point. The secured creditor will determine the cost. So this point is that. So who will determine how much amount has been spent towards this recovery? Only the secured creditor will determine. So that is the first point. Secured creditor will determine. No other person can determine. And then such cost shall be recoverable by secured creditor from borrower. And the third point is any money received shall be adjusted towards. First thing is whatever amount they will get, that will be first adjusted towards payment of such cost, and then discharge of dues towards secured creditor. The remaining amount will be handed over to borrower. That is, if borrower pays some amount, in between, that amount will be adjusted in the same order, like first payment of such cost in terms of the additional cost, and then with relating to discharge of dues, and then the third one is if there are any additional amount that will be handed over to borrower. That amount is not to the secured creditor. Now, section 14. Chief Metropolitan Magistrate or District Magistrate to assist secured creditor in taking possession of secured asset. Section 14 is related to so who is having the right with relating to the secured asset. Okay, only the borrower is having the right. That right will be handed over to secured creditor, and then that right will be handed over to asset reconstruction company. During this entire process, the chief metropolitan magistrate or district magistrate should do their support. Section 15. Manner and effect of takeover of management. In the situation where if a company defaults, in that case the security would be the company. Section 15. Manner and effect of takeover of management. In cases where company defaults their amount towards banks and the asset reconstruction company will take over the management. In that case, the secured creditors may appoint as many persons as directors and also as administrator for the purpose of efficient functioning, and they will collect money. So next, the consequences of publications of notices. The secured creditor will give proper notice to all the concerned parties in terms of these takeovers of management. And then with relating to that, all the persons including directors and then also the people who have the power, superior powers, all their powers will come to an end the moment when this management has been taken over by a asset reconstruction company or secured creditor. Okay, it means that they shall be deemed to have vacated their office. That is the situation. And then the second point is with relating to contract. Any contractor between borrower and the director, between borrower and director and borrower manager will comes to an end at that point itself. That will be terminated. The third point is all properties of borrower, like business of the borrower, shall be deemed to be in the custody of the directors and administrator appointed by secured creditor. Okay, secured creditor will appoint directors and other people to administer the management. Okay, so all the assets will now comes under the custody of these directors and additional people appointed by secured creditor. And then the fourth point, directors and administrators appointed by secured creditor shall take all such steps as may be necessary. They have the full right towards the business, so they can take whatever they feel fit. And then directors and administration shall alone to be entitled to exercise all the powers of the borrowers. So now these people appointed directors and the other persons have the full right over the property, the full right over the business. They can take certain steps that is completely with relating to the rules. Now, certain shareholders' rights suspended. Now, shareholders cannot, exercise their right in terms of these situations. So they lose certain powers. So what are the rights they lose? Let's see. Certain rights, shareholders' rights suspended in case of takeover of management. The first one is it shall not be lawful for the shareholders. So shareholders cannot nominate or appoint any director. First point. The second point is shareholders cannot pass any resolution, and those resolutions are invalid. The third point is no proceedings of winding up of such company if shareholders pass a certain resolution to close this business, and if those resolutions are filed in the court, those will be terminated. Those will not be considered here. Those will be immediately withdrawn from the court. The asset reconstruction company secured creditors will give proper notice and give clarifications to the court, and this will not take any effect. Okay. On realization of debt, the secured creditor shall restore the management to the borrower. The secured creditor will give the business to the borrower once they get the full money. They don't take any action, and all actions taken afterwards will not have any effect. Okay. No compensation to directors for loss of office. In terms of in a situation like this, where the management of the business have been taken over by secured creditors, there will be existing directors in the company. They are forced to move out of the company. In that case, there shouldn't be any compensation to those directors. So we have to be very clear with the word compensation for loss of office. Only for loss of office, there shouldn't be any compensation. But if those directors are entitled for some salary, they are entitled for their salary. They will be entitled for some remuneration, but they are not entitled for any compensation towards loss of office. Okay, so that is very, very important. And then section 17, application against measures to recover secured debts. Application to debt recovery tribunal against action taken by secured creditor. And then the debt recovery tribunal, okay, may declare any one or more measures taken by secured creditor as invalid, which is nothing but the secured creditor has taken some steps which is not fair. Now, what are the options available to the borrower? The borrower may go for an appeal with debt recovery tribunal. Okay, with relating to that, they have to file an application, and then after the application, the debt recovery tribunal may pass these orders. That is, they may pass an order like any one or measures taken by the secured creditor is not valid, or all the steps taken by secured creditor are not valid, and then they can also do some kind of restoration in terms of possession of secured asset. If they sell some secured asset, that is not valid. They can also say that all the transactions taken place in the previous 15 days are not valid by these people. So okay, they can pass such orders. They can also give some directions as well. Okay, what is the timeline? What is the timeline of filing application? Within 60 days, may extend up to 4 months. Just nothing but whatever decision the debt recovery tribunal have to take within 6 months. Okay, it can extend up to 4 months. Okay, what will happen if they don't pass any orders taken? They don't give any kind of result within the 4 months time. Now the next option available to the borrower is appellate tribunal. The borrower have to go to the appellate tribunal and say that this particular case is stay with this debt recovery tribunal for more than 4 months, and we want a quick resolution. So what happens is the appellate tribunal will push the debt recovery tribunal to give some quick result on this. So any party can go and take appeal to appellate tribunal. Any of the parties, that is either a borrower or the other or the secured creditor. Now section 18, appeal to appellate tribunal. Within how many days an appeal should be made? Within 30 days of receipt of order of debt recovery tribunal. Okay, an appeal can be made to appellate tribunal. And the next step is before making an appeal, the borrower have to pay 50% of the total debt due to the secured creditor, and then they have to go for the appeal. At times, the appellate tribunal can give some concessions, like you don't have to pay 50%, just pay 25% of your debt amount and come for an appeal. Without that, your appeal will not be considered. These two conditions are very, very important. At times, the appellate tribunal will reduce this amount from 50 to 25%. That is section 18. You have to be very clear with section 18. Next, section 17A, which is nothing but this is relating to borrowers residing in Jammu and Kashmir. If the borrowers reside in Jammu and Kashmir, application under section 17 shall be made to district judge. If you see, there is no district, there is no DRT here. Here, district judge will take the case, and what happens is, if any decision given by this district judge will be the final, and if any person agreed by the decision given by district judge, they will go to High Court. They will go to High Court under section 18B. They will go to High Court, and the timeline is within 30 days they go to High Court, and similarly they have to give 50% deposit and 25% deposit as per section C discussed. That is section 17A. Caveat is nothing but an application or appeal is expected to be made. That case, if there is an expectation of a case, a person wants himself to be included in that case. A person wants himself to be notified with relating to movement of that case. A person wants to be notified for all the decisions relating to that case, and a person wants himself to be considered before taking any final call in that case. That person will give this caveat, which is nothing but a caveat application. That means this person will expect there will be a case, there will be some application from either of the parties. In that case, please also consider my application. Please also consider my view. So this is something that with an expectation, this caveat application will be processed by the person. Secured creditor or any person are claiming a right to appear may lodge a caveat. Okay, notice of caveat to be sent to all the connected persons, secured creditor, in a proper registered post. Similarly to all the connected people, all the affected people will also be served in a proper registered post. The application or appellant shall periodically furnish to the caveator with a copy of application. Whatever the movement, both the applicant and the appellant both have to give proper periodical returns, and furnished, it needs to be properly furnished to the caveator with a copy of application. And then the validity period is 90 days. That means if a caveator files an application, that is valid only for 90 days. During this period, if any of the parties file an application to the court, that will be considered that the duration is only 90 days. Section 31. Section 31 suggests that the applicability of SARFAESI Act. In what are the areas SARFAESI Act is applicable? In what are the areas SARFAESI Act is not applicable? First one, with relating to Indian Contracts Act. And the next one is Sales of Goods Act. With relating to any rights on goods or pledge or movables, SARFAESI Act is not applicable. And then with relating to any security, if the security is a aircraft, that is a vessel, or agricultural land, in that case SARFAESI Act will not be applicable. And the third one is if the security interest, does not exceed 1 lakh rupee. That means if it exceeds 1 lakh, this SARFAESI Act is applicable. Even 1 lakh is not applicable. Okay, even if the amount is only 1 lakh, SARFAESI Act is not applicable. SARFAESI Act is only applicable only if it exceeds 1 lakh rupee. And then the next point is, at any case, the amount due is less than 20% of principal amount and the interest thereon, which is nothing but if a person has paid 80% of his loan, the remaining portion is only 20%, let it be any amount. Okay, SARFAESI Act will not be applicable irrespective of the amount situation. So that is with relating to SARFAESI Act. So now we have just discussed about SARFAESI Act. So let's do a quick differences between SARFAESI Act and IBC Act. So these two acts serve the same purpose. So why there are two acts? Now SARFAESI Act covers the cases where the debt is a secured debt, whereas Insolvency and Bankruptcy Code covers cases that has both secured and unsecured. Also SARFAESI Act takes care of these kind of cases. Let's see some good numbers practically. In India currently there are 24 asset reconstruction companies. These 24 asset reconstruction companies hold 10% of the stressed asset, non-performing assets of the Indian banks. So the point is that out of total non-performing assets in Indian banks, only 10% are owned by these asset reconstruction companies. And currently RBI as well as central government is giving proper guidelines with relating to these asset reconstruction companies, the way they have to operate, the skills that they have to possess in order to do efficient business. Okay, so that's a quick update with relating to the practical scenario of SARFAESI Act. Okay, hope you like this video, and thanks for your time. Keep up your preparation and let me know if any questions in the comment section. Cheers.